something that we're going to be discussing on this panel. And then we have very qualified panelists to take us through the conversation around DeFi, the use cases in Nigeria or in Africa at large. Why DeFi? Some of us are just getting caught up with fintech, digital banking, IoT, and all of that. And then there's DeFi. So that's what this panel is going to be discussing. And I'm hoping that it will be interesting and it'll be educative and it'll be informative for everyone. So I'm going to start. My first question will be to Ernest here, who's joining us virtually. Hi, Ernest, can you hear us?
Hi, yes, I can.
Hi, okay. So please, for the benefit of everyone that's listening, can you just give us a short introduction into what DeFi is?
Okay, DeFi is this new emerging technology that is, in a way, challenging the centralized system of traditional finance. And DeFi is built around distributed ledger technology, or what we call blockchain. And it uses technologies like smart contracts and other technological cryptographic methods to make financial services faster, more secure, and also lowers the barriers to entry that are traditionally linked with centralized finance. The technology tends to be borderless. At this point, it's still early, even though it's almost 13 years old. It continues to challenge traditional systems and regulators who are still trying to understand how this can be applied without disrupting existing systems. Most of the solutions around this tend to be peer-to-peer, non-custodial, and also mass market. And within Africa, where we face unique challenges with financial inclusion, this technology, DeFi, is seen as one of the pillars that could increase financial inclusion and address many of the challenges we face within Africa. But the technology is still new, and we are excited that within Africa, there's a lot of promise with governments beginning to dip their toes into these technologies with various solutions, including the e-Naira. So thank you.
Thank you very much for that. So in that short explanation, there was mention of cryptography, there was smart contracts, there was centralization. I'd like to ask, just in terms, and then you also mentioned an important concept, financial inclusion. And I'm sure that, if you attended conference yesterday, you'd have heard at least two people talk about financial inclusion and whether we've moved the needle in terms of making financial services available to everyone in Nigeria. So Ernest, I think my next question to you would be in terms of clear examples, what's the DeFi, how is DeFi being used in Africa or maybe in Nigeria or generally in Africa? So in terms of very clear use cases, what have you seen?
Yes, so there are a lot of use cases within Africa, and especially in Nigeria, which is kind of leading the space with innovation. However, many of these services are not yet regulated. So they have a unique challenge in basically growing or getting acceptance within the traditional regulated framework. However, what we are doing at Interstellar is that we are working closely with the leading payment companies, and within Nigeria specifically, like InterSwitch. We are working with SystemSpect, Remitter. We are even collaborating with the central bank on the e-Naira project, and also working with major institutions like the Africa FinTech Foundry, Access Bank, Sterling Bank, and others to begin to explore how we could create a hybrid towards DeFi, because it's a journey and you have to be careful when you're working with new and innovative technologies. However, there are other players in Nigeria like AppZone and organizations, Busher and the rest, that are taking a deep dive into this technology and creating solutions that can be used for maybe, say, cross-border services, digital payments, even solutions around real estate, where you can tokenize real estate. You can make fractional real estate where people don't have to buy complete plots of land where people don't have to deal with the issues of fraud. So these are projects that are being undertaken with some institutions right now within Nigeria that are helping to address some of these challenges that we face. Thank you.
Thank you, Ernest. So I will, I like the fact that you've even mentioned that you're working with some of the incumbents in Nigeria and you're also working with central banks, and that's a conversation we'll have, much later during this panel. And that brings me to Uche. Why DeFi?
Why DeFi? I think that to answer that question, the answer to that exists in what DeFi presents, right? Like Mr. Enes said, DeFi brings about, based on the technology that DeFi is built on, blockchain technology, right? It brings about decentralization. It brings about more innovative solutions around finance, right? Like decentralized lending, decentralized borrowing, right? And you'd see that over time, the rate of adoption of DeFi has greatly increased in like Nigeria and Africa. And then the question comes to like why, right? Why people leaving the traditional financial system and then running towards DeFi? What is DeFi presenting to us that makes it very attractive? So I think first thing was is the rate, right? The rate that DeFi presents and how DeFi is structured to operate. So knowing that there is a very little barrier to entry for DeFi, right? DeFi has it's a new space. There's really less regulation around DeFi, right? So that means that you could easily get up to speed on DeFi. You could easily onboard into like various DeFi platforms, and with very little KYC, you can get started. You can begin to already access financial solutions like lending, borrowing. I know you were asking just recently how many people have used DeFi to lend or stuff, right? I know most people here probably have not used that, but there are a lot of people utilizing DeFi. I for one have utilized that in terms of like leveraging on your other cryptocurrency, because the way DeFi works, the way DeFi lending works right now is that if you have some form of cryptocurrency and you do not want to sell that, so imagine you have Bitcoin or you have some other volatile tokens, you could use those tokens as collateral and then get more stable coins, right, to use for your normal day-to-day operations, depending on what you want to use it for, right? So the access to this is very, you don't have to fill long forms and, have to like put in so much information or documents, right, to get access to these loans, right? And then also because it fosters P2P, right, peer-to-peer transaction, in the sense that, person to person and person to a smart contract. So a smart contract is like a computerized coded logic, right, of how this lending protocols should work. So in this case, you're working, you're lending to a fellow pair, or you're lending to the smart contract. So it's already automated in a way in the system, right? And then you have access to, I can also like bring in my funds, my cryptocurrency, and you could lend that to other persons and you could decide the rate, right? So you are in control, like in DeFi, people are in control of that rate, right? So you could define what rate you want, unlike the traditional system that we have now where the players, like the applications or the products or the regulations decide the rate that would use, right? So all of these things are things that makes DeFi like very attractive. And then the fact that in DeFi, there's this high level of composability, right? Because the DeFi applications, right, is built on the blockchain technology, which is decentralized, immutable. It makes it very easy for different DeFi projects to interact, right? And then it makes it easy for new products or new financial services to emerge, right, based on this. So you could a new financial service could emerge that just interoperates or combines or aggregates about 3 or 4, 5 other DeFi protocols, right, to present even better returns or yields to the user, right? And this is not very, very. There's some form of open API and interoperability in the fintech space, but it's not compared to what we see in DeFi, right? So most of these components and properties and beauty of like the blockchain technology in which DeFi is built on, right, makes it very, very attractive for most Nigerians and Africans and people over the world.
Thank you, Uche. You touched on quite a lot of things. And I think one thing I took away was We want this system because it's not as regulated as what we currently have. We want this system because it's not as stressful in terms of KYC and compliance as what we currently have. So that brings me to Frank. My question is this something that we have seen before? Because at the end of the day, financial services is financial services. I need a loan, I need liquidity, I want to get money. Whether I'm using my crypto, I'm using my real estate as security, I have some collateral that I have used, something to assure you to get the funds that I need. I want to optimize my funds, I invest, or I invest either by holding cryptocurrency, or I put my money in a bank, and I earn some interest. The concept of financial services across most products are the same, but then it's just this different application. First, we went from dealing with traditional banks, then we now started to deal with fintechs and digital banking and all of that. Now it's DeFi. Frank, what is all of this? What are you making of all of this?
Because fundamentally, the different segment and vertical that we serve needs to be served. Therefore, like has been proposed, like Ernest has said, and the other speaker, I think it's important that we separate everything and put them in different buckets so that it's clear to individual consumers, businesses, what works and what should be uptake. DeFi and centralized systems are two separate processes, and they are interchangeable. For instance, in terms of regulation, it hasn't been defined to allow participants fully, participate as they will wish to. And as much as DeFi is seamless, it removes a lot of bottlenecks and middlemen. It also has its own issues as well. Centralized too has its own possibilities, and it comes to play when we talk about funds and people's money. While centralized system might seem to be unstructured, or might seem archaic in the way it's operated, right now people are still very much skeptical about how they can totally just close their eye and believe that things can happen in space as it should be. So, like you said, there's a whole lot. It requires a lot more, much more than DeFi can give in this environment. But outside this environment, and it's been operated in the world, it seems to be a perfect system that addresses a lot of concerns around middlemen, dependencies, bottlenecks, and the likes. And so when we talk about smart contract, we talk about unstructured finance, we talk about lending, and like you have brought it to play, lending on its own or other financial services that are being offered requires a total, uncoupling, because as we have it today, there's a lot of bundling that prevents people to access the things they typically would have loved to if they had the opportunity. So DeFi might address a lot of concerns around onboarding, inclusions, removing frictions from lending and all of that. But on its own, because of kind of system we have, because of the cultural interplay we have, centralized system will also have its own say. Interchangeably, they both can exist to perform a better process for the entire ecosystem. But again, to just go back to the question you asked, what is all of this? I think it's very important that as an ecosystem, we're able to propagate messages that speaks to simplicity in terms of what we desire as a constituent and what those things will deliver. And I believe that whether we like it or not right now, DeFi will have its own say in terms of how a lot of processes are designed. But, I have to be careful speaking from the financial service perspective that until regulation fully have a full grasp of what it entails or what it can deliver and how it benefits every player in the system, we just need to wear that cap that asks us to just take a deep breath and focus on what is very important to the ecosystem. Thank you.
Thank you. So, I'd like to just stay a bit on this point on, the distinction between DeFi and centralized finance. And that just comes down to the fact that, with, the traditional financial system that we have, and even what's current. Some fintechs are still playing in is a centralized finance system where there's the bank, or there's a payment company, or there's an aggregator, or there's also the central bank or the Securities Exchange Commission that's ensuring that rules are complied with. Trust is built in a way. For example, we have the deposit insurance scheme that ensures that if you put your money in a bank, if the bank goes under, there's some return to you. But all of these are things that we don't get with the centralized system. And my question would be, how does that sell DeFi compared to centralized finance system? I'm happy for you, Frank, to take that question. I'm also happy for Ernest to chip in on that question as well.
When the director was presenting, he talked about 5G and how all of this needs to come into play. So bringing it back to the financial system is very, very important and critical that we understand how DeFi and centralized system will both coexist to work together. Centralized system on its own today is operational and is working. Is it working well the way we want it? Maybe not. But if you bring DeFi into it, it then means DeFi can speak to certain part of the vertical that can be quickly addressed. Ernest talked about real estate. He's talked about how cross-border payment can also be helped with DeFi. Those are all areas that both centralized and DeFi can look at and fully address. Do we for our own decide that look with DeFi, let it address specific areas of concern and make that more seamless to fully integrate into the system, while centralized also addresses certain concern and also get integrated in the system. Remember that when it comes to funds or people's deposit, even with regulators being major players, it's always important to align this together so that we don't miss the point and we don't get carried away by terms and things that are fully not practical. Again, economic is a bit special, if you allow me to. So these are things that we then need to look into and ensure that there can be a fusion of both processes, addressing it, and then it becomes a convergence eventually in the future to see which one really works well and who does it serve more. And maybe you want to add to that.
Again, having been in this industry for close to over 13 years, actually, I believe that it's going to be a convergence. I use the word hybrid because as attractive, or you say sexy, this new technology may seem and may be appealing to people, it does come with a lot of risks. We've heard many of the horror stories, people losing their funds, investments, and they now look for regulators to come and help them address their issues. So you can't really have your cake and eat it. I believe that the best way forward would be a hybrid solution, which is what we are doing with some of the institutions I mentioned earlier, because centralized systems have their role to play. DeFi system solutions have their role to play. When we look at social media, for example, WhatsApp, Instagram, TikTok, all these services, you don't have to go to a bank, spend 4 or 5 days verifying to open an account on these systems. It's instant. It's nice. It's a low barrier to entry. With the centralized systems, these systems tend to be closed. With DeFi systems, they tend to be open. You can analyze the codes. You can verify what's happening. However, they haven't quite matured yet. And that's why I think regulation is critical. That's why I think that the current financial institutions, especially in large economies like in Nigeria, have to be careful because you're dealing with hundreds of millions of people and you cannot afford to make mistakes that will have massive consequences within economies. Yes, it does. With DeFi, you can facilitate things like cross-border, but how does that now affect things like balance of trade, exchange rate mechanisms, manipulations, and things like that? So we have to find a balance. And I think that the approach that is being taken by the CBN and other regulators and other financial institutions within Nigeria is the right approach, where they are taking that leap forward while at the same time continuing to research and ensure that there is some level of consumer protection which is needed for large scale and mass adoption. Thank you.
Thank you. Thank you, Ernest. So my question goes to Tunji. You work with regulators. You work with state governments. What's their approach or what's their response to this? Because fundamentally, what DeFi is trying to do is say, well, maybe we don't need the banks. Well, maybe we don't need the central banks. We can organize ourselves. We can organize our financial transactions. We're giving power to the consumers and individuals to determine their financial destiny. What's the response that you've seen from governments and from central banks that you have worked with or that you're working with?
All right, thank you very much for the question. I think the topic of DeFi is such a timely one and indeed very hot. And that's because when you look at the space, not only in Nigeria, across Africa, where I do a bit of work across the region, and MTech as a firm, we're seeing a lot of action and activities from regulators. And I'll class that broadly into three categories. One is the response you're seeing to sort of provide alternate innovation that can enable this sort of capabilities that makes DeFi very interesting. So CBDCs, for example. You're seeing regulators deploy that, Nigeria being a trailblazer in Africa, Ghana, and a couple of other countries across the region. And that's because when you look at some of the inherent capabilities that make DeFi really interesting, we talk about smart contracts, being able to sort of have code execute trust, right? What you would have a central authority do, have those rules codified in codes. For example, you want to borrow money and somebody else wants to lend. In the typical centralized ecosystem, you would have a banking institution that is facilitating, that process, collecting deposits and ensuring that, certain rules and regulation around capital adequacy and all of that are met so that they can then lend to people that want to lend. Now, in the DeFi world, you're looking at code executing those sort of contractual agreements and making things programmable. And that's some of the capabilities you have with CBDCs as well. When you have full adoption and when it becomes mature, you can certainly imagine a CBDC, for example.
Can I pause you?
Yeah.
Sorry. And it's along the line of thoughts that you have around CBDCs and DeFi. Intuitively, when I think about the idea of a CBDC, central bank digital currency, it's kind of contradictory to the idea of a DeFi. So I'd like for you to explain that a bit, and I hope that someone else in the crowd has the same confusion that I am in.
Right. So yes, you're right, because the CBDC is central money, in the sense that the control over that asset is still with the central bank. But when you think about, for the end user, the use cases that makes a DeFi solution attractive. For example, if I wanted to do an intervention as a government and I wanted to program the money to be used in for a particular purpose, like I could say, okay, this is intervention fund to enable people feed their families. So I could program the money such that you can only spend it for that purpose. Like you can't use it to go and buy clothing, for example. So from an end user perspective, whether in the case that I just explained now, the government, making sure that you can do intervention fund with the purpose that you meant it for. So that's a capability that you probably won't be able to do with the state of money as you have it today. But in the sense of the centrality of it, yes, it's different. So you're seeing that as a counter from central banks to sort of create money that has those inherent capabilities that DeFi has. And we're also seeing a lot of activities when it comes to pronouncement, guidelines, and rules on how some of these DeFi solutions can be incorporated and registered in their different jurisdictions. The Securities and Exchange Commission in Nigeria, for example, recently issued guidelines relating to virtual assets and how players in that space needs to comply and get licensed. So you see a lot of that not only in Africa, across, and it's coming from. It's a departure from the myth that says DeFi can't be regulated. Because when you look at the finance part of that concept, it's essentially lending, it's essentially enabling people to invest. And there are certain risks that are enormous. When you think about as much as we talk about the opportunities, those risks are there. If you want to invest money in the trad finance world, you won't put your money where you don't know where that what that money is going to be done with, what asset is backing that investment and stuff like that. And in DeFi world, you have this problem of information asymmetric, where the providers and the issuers of these assets, they know much more than the average investor. And that's one of the problems that a regulator will be concerned about from an investor protection perspective. So we're seeing a lot of rules and regulation, but to also enable that, because the pacing problem of technology outpacing and innovation outpacing regulation means that some of these rules may not always be fit for purpose. So you're seeing a lot of creation of regulatory sandboxes, which is generally a space where regulators open up for innovators in this space and other types of innovation in financial services to come and sort of demonstrate the viability of their solution. And it's a learning opportunity for the regulators as well, to be able to understand, better understand this risk. And when you think about what we're even talking about for regulation, you're talking about codes, right? Most of the time, they are open source codes that are meant to execute certain rules and instructions. So it's a paradigm shift. It's not an incremental change. It's a shift from where we're coming from, where a regulator probably needs to start learning how to understand and interpret codes, right? So that takes a lot of doing. And how do you enable that to happen? And at Mtech, we're very privileged to be working with regulators. Very recently, the Bank of Ghana, for example, launched the Digital Regulatory Sandbox to enable, not only the innovation to go to market, but for them to be able to understand with very clear insights from data what is happening when such innovation gets to market. And we're happy to be working with the Central Bank of Nigeria as well, and a number of other regulators in the region to enable that.
Okay. So I think what I hear from you is the central banks are responding in a way that you think they should be responding. So it's not like, there's this, they're not responding from a perspective of, well, maybe this has come to displace us, or this has come to make us a bit less powerful than we should be. And there might be a way to work with what's happening in this DeFi space.
Absolutely. I mean, it's also come from the realization that, some of these innovation are borderless, right? We're talking about internet-enabled innovation. So at times, it's not even something you can fully control in that sense. So you have to be open, open for them to come. Yes, there are certain guardrails you can put in place. You can operate here. This is my jurisdiction. But the more you open up as regulators for those innovators to come through and have a dialogue, understand what they are building, the better for everyone. The all-important investor protection, consumer protection consideration comes to life with that. Also, when you think about regulators, we talk about, a number of their policy goals around protecting consumers, financial stability and all of that. But regulators too also have the all-important responsibility of deepening the market. And when you think about opportunities around financial inclusion, around even allowing the underserved to be better served, you can see an opportunity, like Ernest mentioned, for the interoperability of DeFi and CeFi platforms.
Thank you, Tunji. Okay, Uche, my question to you is this. For the average Nigerian, how does this impact us, or how does this affect us? And I come from the perspective of us coming from, we've had history of failed banks. We've had history of failed P2P scams. We've had history of MMMs. We've had history of, ingenious financial, products or solutions that promise you very, very attractive returns. Or, and the average Nigerian just hears about this and they're interested, they want to get on this. So there's this new fintech app that offers this, or there's this new fintech MMM thing that's on Telegram or WhatsApp, and everybody's interested. We're early adopters. We love technology, we love fintech, and we love things like this. How does this impact the average Nigerian?
This impacts the average Nigerian in many ways, particularly in the context of a failed bank. When you have a bank fail, it's not good for the populace, it's not good for the country, consumers of financial services tend not to trust the centralized system. What DeFi provides is trust operated on blockchain technology, which records multiple transactions and verifies them by independent people. So you have a group of people that are independent of each other that now validate these transactions. So that trust is very, very crucial in the context of a failed bank. Secondly, DeFi is non-custodial. So in your centralized financial system, everybody will have a bank account. But with DeFi, and your bank account is held with the bank of your choice, and there are several banks out there. You can even have multiple bank accounts. But with DeFi, there is no bank account. What you have is a digital wallet that holds your assets. What you're innovatively saying to the user is that he's in control of his assets, in most cases 100%. And even when that decreases, it's probably because such a user now wants to transact using an exchange, a DAX, DeFi exchange. And some rules of this exchange might require giving up a certain degree of your control over your assets. So, for example, if you're doing collateralized lending and things like that. So, from that aspect, and in the context of a failed bank, it gives the average Nigerian a vista of opportunities to grow wealth and engage in cross-border transactions within the comfort of his or her home.
Okay. So we control sometimes, there's also the element of risk. And that's one thing that, we've seen with a lot of crypto scams. In fact, there's a fancy word for it called rug pulls, where, people just, they issue tokens, they tamper with liquidity, and then they essentially just disappear with your money. And so I was just going to read something about, I was just going to read a quote about DeFi finance protocols. So there's this analysis from Chain Analysis, and then they track, blockchain transactions and DeFi transactions. And they say that DeFi finance protocols are playing an increasing role in money laundering, with the total value of the cryptocurrency laundered rising year over year by 30% in 2021, according to them. This demonstrates that DeFi platforms need to consider compliance solutions to prevent their platform from being abused for illicit activity. Again, my question to you would be, one of the roles that central banks or security exchange commissions also play is ensuring that our funds are to an extent safe. You're not being used to launder illegal activity, or money laundering activities are not carried out on central platforms or on financial platforms. How do you see that playing in the DeFi space? And I ask that thinking about the average Nigerian that has committed his funds to this platform. I ask that also because, to an extent, apart from the SEC rules, in Nigeria, we barely have regulations that look at digital assets and virtual assets.
Well, I think is natural. It's human nature, actually, that anywhere you have assets or anything of value being transacted, you'll have some negative elements in terms of, as you put it, fraud or money laundering. And as a result, DeFi is not excluded from that natural phenomenon. As long as you have human beings as users of decentralized finance, you will always have that. The question is to regulate or not regulate. In some countries like the US jurisdiction, you have the proponents of same activity, same legislation, meaning because it is still financial services being rendered, there is no need to tinker with the existing legislation. Well, you now need to look at their reports of financial fraud in that jurisdiction and see how it has skyrocketed. Take Europe or the European Union, for example. You have um, the bank execs, the regulators there are not exactly 100% pro same activity, same legislation. They are clamoring for legislation or regulation, as the case may be. But even on that side of the argument, what do you regulate? Do you regulate the wallet? Do you regulate the exchanges? And to what extent do you regulate the exchanges? Because if you say DeFi is distinctive from centralized finance, bear in mind that every exchange will also have its own decentralized autonomous organization, which is an authority in itself.
Thank you.
That sets the rules for activity on that particular exchange. So are we now backsliding into centralized finance? Or are we saying, okay, this is centralized finance with a greater degree of control for the users? So these are issues that will require formulation of policy and more user engagement, what people really want, what will make people comfortable, what will be acceptable to people, and then any government will now come forward and make the necessary legislation, because it is important for government to tap into decentralized finance. It is a source of revenue. If you look at the reports from some of the exchanges, say Uniswap, for example, you have transactions totaling 300 to 600 million US dollars per day. Imagine if that was going through a centralized finance from your bank charges that would now in turn dovetail into,
That's
your
probably why we're moving to DeFi. The
your,
bank
your
charges that you
taxes,
mentioned.
your corporate taxes that will be paid or remitted into government coffers. So it creates wealth, and that is the point to take home. The total value lock sometime this year, depending on which report you follow, ranges from 169 billion to 200 billion
It's a
US
huge
dollars.
market.
And what do you mean by total value lock? These are assets
That are
that
locked in.
have just been put in a DeFi protocol that are probably earning interest,
Yeah.
rewards, tokens, or coins.
Yeah.
So they're not, they're just.
It's too big a market to ignore.
It's too big a market to ignore,
Totally
and that
agree
is
with you.
capital that your traditional financial institutions, if they had access to, would greatly enhance their shareholder positions and balance sheets.
So I think one thing I can, maybe conclude from from the different responses from our panelists is that DeFi is something that is here. Regulators should be looking to. Well, they're already thinking about this. We have some roles in some countries. MTech, and some other companies are already working with regulators. From an incumbent perspective, from Frank's perspective, we need to find a way to coexist. It's not going to be only DeFi. Most likely, we will need to we'll find ourselves in a universe where there's some level of DeFi and some level of centralized finance. And I think that creates opportunities for fintechs, for companies, for individuals as well. I hope that we will still have some time to take last minute views and comments from our panelists. But at this time, I'd like to take questions if we have any. Okay, no question. We have one question from our online panelists, and I think I will direct question to you. So the question is, do we have any DeFi regulations in Nigeria?
In my view, we don't have any legislation that governs decentralized finance. And that is the same for most countries in the world, but not all. Take Mauritius, for example. They've just come up with their virtual assets initial token offering legislation, which is at the forefront of legislation of virtual assets in Africa. I know SEC has come out with their guidelines, but it's a guideline. It's not legislation. Okay?
But But you'll
on
be running foul of the regulations of the guidelines if you were to carry out activities in that guidelines.
I agree with that.
Yeah.
But, when you're talking of a market that, you have the likes of 169 billion to 200 billion
We need
total
something
over,
heavier.
you need something more rigid, something more certain, so
Mm.
that you can attract the requisite volume of investment and attendance skills.
Okay. Okay. Totally agree with you. I think our time is up. I'd just like to take one sentence, two sentences from every one of our panelists, just in terms of like your closing remarks. It might be what you think about DeFi, where you think DeFi will be in the next 2 to 3 years, what you think the opportunities are for fintechs. I would like to start with Frank.
I like to just, typically, it just suggests serious conversations should continue. From my own perspective, and in the context of everything being said about centralized and DeFi, we don't have any choice. It's come to stay. And like Uche said, regulation is now very important. Whether it's going to be agreed that it should be centralized, and I'm talking about regulation now, or whether it should be decentralized, it is still very critical to the operation of the process itself. And I think further collaborations with the different ecosystem and market vertical is also very important so that we can define what scope to use both the DeFi and centralized system for. Thank you.
Thank you.
Well, yes, we definitely need to ramp up the awareness campaign for users, for regulators, and industry professionals, because we need as much input as we can get to map out the way forward for decentralized finance in Nigeria.
Thank you. Ernest?
Yes, I don't know if you're aware, about 2 months ago, there was a hackathon led by the Central Bank of Nigeria and the Africa FinTech Foundry, which saw over 5,000 startups and individuals register to participate. And that shows that the major regulator within Nigeria is actually interested in this space and is looking at working with the larger and broader ecosystem to find solutions and to learn from the data being generated on how to best bring out these innovations into the world. I recently came back from South Africa and Lagos and spent some time with banks in South Africa, where, as you might maybe aware, last week, they now have a new framework for regulating such services. And many of the banks now have titles like crypto head of crypto transactions, which are things that we couldn't hear before in the space. So it tells you that a major economy like South Africa is ready to be playing in this game. And I feel that the giant of Africa, which is Nigeria, is also playing a leading role, but they are being cautiously optimistic as they move towards this new DeFi space. And we are very excited at Interstellar to be supporting it on this journey. Thank you.
Thank you, Ernest.
So I think most of the panelists spoke a lot about how DeFi and CeFi would collaborate going forward, and I think that's actually true. So even though DeFi is like a progression in finance, there's still a place where CeFi and DeFi can, collaborate more like an hybrid finance before we move into that space. So I think that just generally some of the things that makes DeFi really interesting and really attractive, one for sure is the trust that people feel like they get in the DeFi ecosystem because they're in control of their world, right? So I think if a way to move forward would be how do we how do we bring in this trust as well in the traditional finance that we have, right? If that's the way to go. But yeah, I think that there's opportunity for collaboration with it too.
Thank you, Jane. Code you trust. How about you?
All right. I'll draw a few points from an analogy to close. So if you think about vending machine, for example, maybe it's not a very good example of a DeFi. Of course, certainly not a DeFi, but it should give you an idea of what a DeFi looks like. So you put your card or your whatever it is to buy a bottle of Coke, and for whatever reason it goes wrong, and I've had that experience before, it doesn't dispense you Coke. Who do you call, right? If you really don't have any face to or any brand to that. And that's the kind of risk we face when we operate in a DeFi environment many times. So yes, we don't want to centralize it because it's a new shift in thinking in financial services model, but we want to put some guardrails around it. And I think that's where, the regulators play an important role. There's an imperative for the public and private sector to collaborate to make sure that we can truly get the benefit of DeFi without, throwing away those important projects that are really innovating and creating solutions.
Thank you very much, Tunde. I liked the analogy. Thank you very much to all our panelists. I think we've had a very informative and insightful discussions. Thank you to the audience. I hope you learned one or two things. And thank you to the Nigerian FinTech Week as well. Tim?